one, so I'm a little rusty, but hopefully it's not too shabby. But the purpose of today's call is we're going to go over the financial overview or financial first of Cloud Suite Industrial. So we're going to take a look at some of the big picture feature functionality within Cloud Suite Industrial. We're going to go, it's mostly going to be just talking through the system, talking through the capabilities of it. If you have any questions along the way, please feel free to interrupt. It can be as much educational as you want, or at the same time, if you want me to just keep in the context of pre-sales, we can do that as well. So we'll start off with the multi-state capabilities, okay? And let's imagine this is your corporation, okay? And your corporation is headquarters in, let's say, California. You can have different financial entities. And what I mean by that is, in your corporation, you run out of the US and you run out of the United Kingdom or UK, or you can call it Europe for that instance. Now, within the US, you have multiple warehouses being in Dallas and Los Angeles. And so what you can end up doing is creating a financial entity called the US region, or in your case, you can call it anything you like because it is user defined. And what you're able to do is roll up those similar subsidiaries into a reporting bucket. And you can do that the same way in other regions such as Europe, Africa, Asia, so on and so forth. Now, it doesn't have to be necessarily geographically regioned. If you want a financial entities to be for a specific type of business you're doing, in the past, I was just talking to a medical company. They wanted to have all their clinicals roll up into one financial bucket and all of their services roll up into another. So these are completely user-defined and gives you flexibility to do the reporting in your organization the way you need it. This is just an example of how you can do that. Now, we're going to talk about centralized AR, or accounts receivable, accounts payable, as well as vouchering and invoicing from one subsidiary, but for all of them. So one of the big advantages of Cloud Suite Industrial, as opposed to, let's say, a QuickBooks, is the ability to do centralized AR from one login instance. In QuickBooks, you have to log in and log out for each single subsidiary. So what I mean by that is we're going to take a look at Site ID here. And notice how you will see other subsidiaries invoices outstanding, such as your LA, London, and if there were any others, those would pop up as well. So you're able to go ahead and pay these invoices, or I should not say pay them. You can post them, you can consolidate them, and from one instance as opposed to logging in and out each time, which is what happens in QuickBooks. Is that making sense so far?
Yes.
Okay.
Yes.
All right. The same thing is applicable for your accounts payable. Now, with your accounts payable, you might have vendors that are in different regions, and we'll talk about multi-currency in a little bit, but same thing applies for your accounts payables. So notice on your AR, or not AR, AP aging report, or buckets I should call them, you know what's going to be due in the next 60 to 30 days, and then what's late. So the people in your accounting department really have a good idea of how to keep track of what's going to need to be paid and what's over the due date, so they don't accrue interest and get any kind of late fees for that. We find that our accountants are using this in multiple different ways. A lot of them like to use Excel, so there is the ability to export these to Excel, and I'll just give you a quick glance of what that looks like. course. So, of course, when you're trying to do it during a demo, it's not going to work. But let's do that one more time. And this next time it should work. Maybe let's pick this folder over again. Click OK. Bada bing, bada boom. And now you have all of your vouchers that are outstanding. So then the accountant can do whatever they need to send it to the different people within the organization, or just use this as a printout for themselves. Everything making sense so far for accounts receivable and payables, having it in a centralized location based on the current site and the site IDs. I will take silencing as a yes. So another thing that we find that accountants are really looking for is the ability to post invoices as well as vouchers from the vendors all in one place. So to give you an instance of what that looks like, these are all the vouchers that need to be posted based on receiving the product that haven't gone through the system yet. So no longer do you have to go one by one. You can simply select the ones you want to post, and you'll get a bucket total of the material, freight, miscellaneous charges, etc. And all you'll need to do is simply copy those amounts into the fields up here. And then through those transactions, you can post or generate a voucher. Now, these fields are what we call accessible to the user. So if you need to change the voucher amount, you can do that here. You don't have to do it on another field. That just allows the accountant to have more flexibility and user-friendly, so they don't have to go back and change the PO and whatnot. So once you do that, you get a generation voucher, and then it'll say the builder voucher number, and that's going to be tagged to that voucher throughout the process of the payment. That gives you the ability to look back to the POs and see exactly which vouchers came on this specific builder voucher, I will call it, and just gives the accountants that traceability going back. So coming from our competitors, we see a lot of the small organizations, accounts payables, accounts receivables, it's not streamlined. They don't necessarily have visibility into what's been brought into the facility or maybe what's been shipped out, because you can do this the same way for the invoicing portion on the accounts receivable side. And this is just something that really simplifies their life. So any questions about the voucher building or even invoice builder is what our form's called, but in that case, just invoice building. Any questions on that, or does it make sense?
None from my side. Mithali?
As of now, no.
So, Paul, one question, like when you said we can change the values of the vouchers or the amount there, how does it keep track, or like does it go back and change it in the original PO or something, or how does it? How do we know that who changed it or why was it changed, that amount? Because that's a kind of confusion it can create if we change it at this level.
Yep, that's a good question. And I don't know if it changes it on the PO form. There are reports about when things are changed or even posted for the specific POs. So you do have traceability, but I don't know about if it changes it specifically on the purchase order. I'd have to get back to you on that one.
Okay. And when you take multiple of those POs and you build a voucher, so it's no more one-to-one relationship. It could be multiple vouchers for one PO, right?
Correct.
Yeah.
Correct.
Okay. Okay.
All right. So we'll talk about multi-currency followed by just the consolidated GL and how you can structure the chart of accounts for your multiple entities. So the multi-currency is pretty straightforward. Based on the currencies that you're doing business with, whether it be on your accounts receivable side or your accounts payable side, you'll set up the relation of, let's see, from the Great British Pound to, I think this is the Australian dollar. So if we got any Australians on the phone, I hope I'm correct on this one. But anywho, talking about the effective date, it's going to take the most current effective date that's within the system, and that's what's going to apply the buying and selling rates for whether it be on a customer order or a purchase order. So at the end of the month, you have the capability to then do unrealized realized gains based on the current exchange rate. Now, a common question that we get is this something that we have to manage manually ourselves? And the answer is yes. So you can have multiple ways of solving that issue. But for most of the companies that we deal with, they're only doing it in a couple currencies, so it's pretty manageable. If they want to do it on a daily basis, you can get it from Thomson Reuters, or New York Times has a listing of all the current exchange rates. And then you can do a simple import via CSV, which is like Excel. Or we have some connectors. You can do third-party integrations where you have the ability to get a company like Alivera, I think it is. So, or I don't know, I forget the name of the third party, but they can actually import the data in so you get it on a daily basis and don't have to do it yourself. That really depends based on how many currencies you're doing with and if you need it every day, every week, or every month. Any questions on currency exchange rates? Okay. So talking about the chart of accounts and consolidated GL, we found that a lot of the organizations we were talking to have subsidiaries they bought out at one point that have their own chart of accounts. They have their own chart of accounts. How do we map the two so that they can talk to each other, but also remain the same? And what I mean by the same is different, because they want to remain using their current chart of accounts, but they ultimately need to roll up into a corporate headquarters. All that is a simple configuration during implementation to map out the one-to-one relationship. And what I mean by that is, if you have a sales account that's a different number in, let's say, your subsidiary in Germany than it is in the US, and you want to have it, all they need to do is make sure those numbers match up for the roll up. Does that make sense? Am I confusing anyone there? I feel like I didn't explain that very thoroughly.
Yeah, I'm confused actually.
Okay. So the corporate headquarters is going to have a chart of account. Let's call it 10,000. The UK for sales, maybe it's 1,100 instead of 10,000. As long as you identify that 1,100 actually means 10,000, or I shouldn't say 11,000 means 10,000, then the roll up can happen seamlessly. That's what I meant to say. Does that make sense now? It's just mapping things out, and that's not too hard. Any organization that has multiple subsidiaries has definitely dealt with that. Is that clear now, or?
Makes
No,
sense.
Okay.
no, I'm still confused. I'm sorry. If you can make it little simplified.
Okay. Maybe we'll take it offline. And maybe talk about chart of accounts more, and maybe that'll make more sense for you. Now, with the chart of accounts, it comes out of the box with your typical account types: revenue, expenses, assets, liabilities, things that you're going to see on your balance trial reports, your P&Ls, so on and so forth. And with that, it's completely user defined. So we have it out of the box where it's going to define, let's say, sales as the account 40,000. And you can have these accounts have an active and effective date. What that allows the user and the end user to do is make sure that they're posting to the correct account. And if they're effectively obsolete, not be able to post into that account. So maybe you're changing your chart of accounts year over year to better report based on departments. Who knows? There can be a various number of reasons, but this gives you the option to close out an account after a specific date. That's different than a lot of our competitors. Now, another thing that is pretty useful for companies is being able to allocate. Now, typically this is something that was done by an accountant that month over month, they would take a look at, let's say, a rent and then create journal entries individually to determine how that rent expense is going to be allocated throughout the organization. So what we're looking at right now is a hypothetical rent expense with an allocation of 20% to each department. And we'll go into these unit codes, but these unit codes are departments within the organization so that they are getting equal amount. Taking it a step further, you can allocate by statistical account. And the statistical account can be something such as headcount. So maybe instead of having 20%, you want to allocate the rent expense based on the headcount of the total of each department. So if you have 100 people and the headcount for this first department is 16, it's going to be 16%. That gives you the ability to really improve the accuracy of those expenses, or I should say allocations across your organization. Is all making sense so far?
Yes.
Okay.
Just one question, Paul. In that revenue form, the form we went right now, chart of accounts form, the effective date and the absolute date, we have to manage manually, or it keeps changing?
So you don't need to have an effective and obsolete date if you think that your organization is going to have the same chart of accounts over time. But if you have an effective and obsolete date, that is something the end user will have to manually change from time to time. Okay. So let's talk about the unit codes. So the way our chart of accounts is structured is you have your natural accounts. Those are your sales, your revenues, your expenses, so on and so forth. You get 12 characters there. Okay, so it can, and I'm not sure if it's numeric or just numbers. So let's just say it's numbers for now. I'm not 100% sure about that one. But then you get 4 separate unit codes. And what that means is you're able to define the different organizations, such as your departments. Maybe you want to define your sales based on product codes. And then we left these blank here because it's completely user defined. So you get 4 unit codes that have 4 characters each, which effectively means that if you're typing in a unit code, you have 1,000 options when you're creating them. It can go from 1 to 1,000. With the chart of accounts, you can create accessibility to these specific unit codes, deny it access, or say that it's actually required. So if there is a sales transaction, you might want to have that it is required so that the correct revenue is going to the correct department. Everything making sense on the Unicodes?
And this unit code 4 is defined. It cannot be changed to 6 or 7 if someone needs that.
So you're asking about Unicodes having 6, 7, 8, 9, 10 different Unicodes?
Yes, like in one of the organization, they have right now 7 segments of their account. Usually I've seen 4, but they have 7. So if someone wants a 7
Okay.
or more than 4.
Yes. So I've talked to a couple folks here, and the answer is 4 is what's allocated out of the box. So if you need to create it, I believe that is some coding. It's not something that can be easily configured. So to have 6, 7, 8, 9 Unicodes would take a little bit of work.
Okay.
Okay. So we talked about Unicodes. We talked about the chart of accounts. In addition to the chart of accounts, it can be attached to a site ID. And what a site ID is boils down to is that subsidiary. So for each subsidiary, you have a chart of accounts, and that allows you to report as a singular and also as a rolled up. So that just gives you a lot of flexibility for your reporting. That's very important for organizations. So we'll go ahead and talk about, and just these are just the typical journals that go along with the chart of accounts. So whenever a transaction is posted in, let's say, accounts receivable, it'll go into the accounts receivable journal subledger, which then allows you to post. And this is just a place that typically our accountants go to review the things that have gone on in the past week, month, or just day in that instance. But we're not going to take too much time on this. Okay, so let me find where we're going here. Just give me a second here. Budget and planning. We'll define the accounting periods first. So standard accounting periods. So in the new version 10, you're actually going to be able to define accounting periods as a single day if you'd like. Version 9.01 has 13, but typically a company is going to have 12, and that's kind of the standard there. You'll see when a fiscal period is closed or not based on the check mark. So looking at our fiscal year of 2017, you can tell that this is closed. Now, a common question that we have is, we just close our period. Is there any flexibility for maybe super users, such as a controller, to post some transactions, maybe to, correct an error? The answer is yes, you can. That's something that you define on the parameters, and you can give specific users within the organization a flexibility of time, whether it be 1, 2, 3, 5 days, so on and so forth. That gives them the ability to still post in the GL for that current month or period. Moving on to budgets and plans, what we typically find applicable for our newer customers is the first year they'll, and most companies are doing budgeting and planning in Excel in some way, shape, or form. So the way we'll do it is, oops, give me a second here. I pressed the wrong button. So what will happen is the first year you'll import all of your data into Excel. No, sorry, import your Excel data into the system. And then once you put it into the system, then you have some flexibility to change the budget, create multiple ones of it, and then also use some of the tools that are similar to Excel, where if I want to change my budgeted change column here by 3%, I can do that for all of them automatically, and that's just a simple function within the system. Now, a common thing that folks are talking about is having, multiple versions of the budget, and that's common throughout the industry. So the way we handle that is using the planned versus budget change. So the planned is like that first rough draft. At the beginning of the year, you say, this is what we're planning on doing. And then throughout the year, you change the budgeted amount because typically when you have that plan, you show it to different departments. They say yes or no. Well, maybe we should change this by 3% here or there. And then you put the budgeted change in this column. So this acts as two different versions and allows you to see side by side where you started and then where you ended up for your budgeted change. And then within the year, you're going to get the actuals posted right next to it. So you can see here in the first month, the actual change for our cash on hand was about $250,000. And then in the next following month, we went up, $380,000. So the actuals will populate in real time, so you can see it versus your budget. And once again, a lot of our accountants, their favorite friend is Excel. So it is a simple to Excel, or you can even use it as a graphical or put it into our reporting tool, DataView, to get a more, let's say, more beautified version or of report of your budget. So does that make sense for the budget, how you manage it, and how it works within the system?
So Paul, like the copy function or something, if we want to just copy it from last year, can we do it here? Do we have the copy for all accounts? Like if we want to just copy it from last year and then make changes?
There is a copy from actual. I've done it in the past, and since it's you guys, I'm going to try to find it on the fly, but I typically wouldn't. Da, da, da. So Sanjay, I will get back to you on that one. I know there is a copy actuals,
Okay.
and that's a very common thing that's asked. Okay. So we'll get into, let's see, the financial statements. So out of the box, you're going to get the typical reports that a corporation needs, such as your balance sheet, your P&L, some different income statements, so on and so forth, industry standard, and that's what is defined as a statement definition here, just that report title. Now, the way it brings in different information, such as what period we're looking at, percentage of sales, is defined on the column. So that gives you a reference of time. And then what you want to look at in regards to maybe looking at a balance sheet, your revenues and expenses, is defined on each line or row. Think of in Excel, it's rows. So columns and rows. And then what you end up getting is a financial report. So we'll take a look at a balance sheet for last month, because I actually didn't close out last month, and give you a preview of that. Now with the print button, you can actually hook it up to a printer so that in real time it's going to a printer and printing out. But this is an example of, there was a definition, and it's not titled here, but it's the current month, the site which it's looking at, and all of the natural or chart of accounts that you need on your balance sheet. You can also add rows that don't have to be tied to a total chart of account or natural account, and just take a total of, let's say, the top 3 rows. or maybe a total of, chart of account number 10,000 and then 10,100. So this gives you flexibility for reporting that ultimately your corporation may need. So within this reporting as well, you're only seeing, that natural account without the unit codes. If you want to dive down and get it for each unit code, you can simply do that and then have it as a subset rolled up so that you can see that. Let's see let's go to 40,000. What I'm trying to say is, let's imagine this said 40,000 for your sales. You could see for each product line how much money you're actually doing in sales for that particular month at a single subsidiary. So it just gives you more flexibility, more detail that ultimately shows if you're doing good or not, maybe as opposed to previous months. Everything making sense for the way we do our reporting? Maybe you have some questions about the configuration or look and feel.
No, I'm fine.
Okay. So then we'll jump into fixed assets. So the story that I typically like to do is an asset that everyone's familiar with, cars. You buy a car from a dealership. So in our world, in the manufacturing world, maybe it's from a vendor, a supplier, and that transaction is going to be posted and then create a asset master, or a fixed asset, we should call it. It gives you traceability to exactly where you bought it from and then at what date. So getting into just the story, everyone knows that when you drive that car off a lot, the car depreciates by, 25%. It's not the same value as when you were looking to buy it. So looking at our fixed asset here, which is a car, it had a value, initial value, and I put the insurance value as its purchase value. You'll have the date that's defined as when it should start depreciating, its useful life in terms of years or months, and then you can have things such as the vendor number and the insurance vendor all tied in, so you know exactly how to collect insurance if for some reason you got in a car accident. So looking at your fixed asset cost, this is where I was talking about tying it to a purchase order and seeing exactly how much it cost when you bought it. Now going to the actual depreciation methods, out of the box you have multiple different ways to do it. Simple ones being straight line depreciation. Year over year, it's declining 10%. You can do, double declining. And then I'm actually not familiar with what an ARC S5 is. So let's actually drill down into it. Maybe it's custom. So in this case, remember that that car has a depreciation of a life cycle of 5 years. So each year is defined individually. And maybe in this case, I'd want to change it to 25% right when it gets for year one, because that's how much it's going to depreciate when you take it off the lot. So that's completely configurable. And then there is a batch report that's run every month. You can have it as something you do when you do your month-end close, or you can do it as a batch that's done in the background that will create the journal entries to accumulate the depreciation. And then ultimately, it's going to track in these fields here, and you'll see exactly when the last transaction date was posted for the depreciation. So that's the simple way of showing fixed assets and how you can manage those within your organizations. Now, for our manufacturers, those are going to be things like forklifts. It's going to be the machines that they use on the shop floor. And for those, we have usage depreciation, so that maybe they have it calculated that The machine line is good for creating 10 million units. And so it's going to track its depreciation based on how much it's being used. Any questions about fixed assets?
One question, Paul.
Mhm.
Like in the fixed asset field, I see the class code or the asset number, but how do I link it to something? Suppose we buy it in our purchase order, we have an item code. Uh, how do we relate that item number to the asset number?
Okay. Was it on the previous form or this form?
No, any like here in the asset number, any asset we are talking about, how do I, is there any item code that I can relate it to or tie it with?
Yes. Yes. Sorry, I didn't follow it first. You can create you can create a serialized number, or you can create an asset number that it completely tracks where you bought it from. Actually, you know what? Can you ask that question one more time?
Like,
I
suppose let's talk about computer, which is an asset also.
mhm.
And when we buy it through our purchase order, we put a item number for that, and here we are keeping it separate information about that asset. So how do I link that asset to that item that I bought? Uh, because here you have asset number. This asset number would not show as a item number in your purchase, right?
Correct. So let me dive into that purchase order and see if it actually has an asset number, because there is a way to track that. Okay, that's a very good point, and I completely understand what you're saying. So we'd probably do a serialized number so that when you bought it, it gets a specific number, and that is not looking like it's coming through here automatically. You probably put it in manually, but if you go into your serialized numbers, then you could tie back to it that way.
Yeah, because this serial number seems to be the for every model, and there is a serial number for equipment. So this looks like model number, serial number of that item, but our inventory item is what I was looking at, how to relate that.
Yep. So yeah, to your point, I think it's going to be a little manual.
Okay.
There is ways to tie it back. It would just be a little bit of configuration. Good question though. Good call out. Okay. So I'm going to jump into, let's see, go into our journals here. So for an accountant, they're going to want to have accountability and traceability within their organization. That's just simple and straightforward. From a CEO perspective, they're going to want it because they have internal and external auditors, and they got to make sure that their books are straight. So you can get the transaction detail for every single transaction. And for this one, you can see that it came from, and what I should have said is we're in the accounts receivable distribution journal. Getting more detail about that invoice, you can see the order number. And then from there, you can even drill down deeper to see, and I apologize that typically in a demo, I wouldn't do this on the fly, but in a normal instance, the order number would populate and show exactly who the customer is and exactly when they got the product, as well as what products they got. For just the accounting and journal entry purposes, you'll see the chart of accounts that they're hitting, as well as the debit and credits that are automatically being created in the background as you go through a simple order to cash, for instance. So this is just a standard, but also important feature within the system that creates accountability and traceability within your organization. And then for month end, a common question we get is, that's just something that we struggle with. How can we streamline our month end processes? So we have a number of activities that have been created, such as your vouchers payable report, posting your journals all at once instead of doing it manually, to be invoice report, bank reconciliations, reversals, and these are activities that can be done simply at a click of a button, but really streamline and quicken the process. So we've seen customers go from, closing takes them 10 days down to 3. If it's a smaller organization, maybe it took 1 full day of 3 accountants down to, 2 hours of 3 accountants. And those processes are defined for each role. So going into, your accounts payable, you have activities, and these are these things I was talking about that really help them manage not only their month-end process, but their day-to-day operations. In addition to that, you have the role for accounts receivables that's tailored just to what they need on a daily basis and monthly basis as well. So with that, that's kind of the gist of the Financials First demo. It's high level. It doesn't consist of doing a lot of transactions. It's more about understanding the information and just talking through the process and instilling confidence in the customer. So do you guys have any questions about, how I did this presentation, or, how Mitali should go about it?
I'll defer to Mitali. I mean, it makes sense to me, but she's doing the grunt work of all of the training, so this one makes more sense to her than me.
Right now, I don't have any questions to ask you related to this presentation, because I'm trying to figure out that how I'm going to do this presentation, and which all forms I have to open and what all information I have to give. So I think I'll go. I think you'll provide us the recording, and then I'll go through the recording, and then probably I'll have to.
Okay. So this presentation I call more of a park and chat, because with accounting, you can get really deep and you can lose an audience in kind of a snooze fest. So this just is really a demonstration that shows them, hey, we got it, check off the box. If you need to talk about it in a deeper level, we can, but for most times, we see that customers are okay with this kind of high-level overview. So what I do know, Mitali, is, and I'm sorry if I'm pronouncing, is it Mitali or is it Mitali?
It's Mitali.
Okay. I do know that these are custom to my demo environment, but all of the forms that I go through are on that demo script form or demo script Word document. So what I'd recommend is just having a folder you create, and I've seen you do it in your prior demos, where you have the, kind of like this, and you have all of your folders all in one place ready to go. I'm sorry, this is a bad example, but I think you understand what I'm saying there, right?
Yeah, I understand.
In a lot of cases, you can have, a couple forms pre-populated already in here, so that it's just easy to click to the next one.
How am I supposed to do that? That I can have it here and.
So what I mean by that is you can have the accounting periods form open. You can have the budget and plan tab open, and you can just go from tab to tab talking about it. But what I would recommend is going back through the presentation maybe taking a screenshot of this. And this is good stuff to use for your PowerPoint and as talking points for the actual demo. So you can actually use it the same way I do, and then just jump into a tab, or even just have it on the side.
But what you have, like when you click on this flow, it takes you to that screen. That part she cannot do it, right? Or can she?
So what she would do is she would have to go to this form and then eventually just save it to her side here. I don't think this is on your demo environment, this form right here. There are a couple, and I think I sent it to you a while ago about the solution. It's referred to as a solutions page, so I would check that out, and it might have this one because this is a pretty standard, overview presentation.
Okay. Yeah, because I remember last time we had asked and it was said that that's more for internal, and we don't get access.
Yeah, it is, and they're trying to get away from it, to be honest. And then they're trying to use the dashboards, or I should call them home pages, to guide the demonstration. These can, once you get to a point where you're comfortable with the system too, you can create these yourselves if you'd like. But any other questions? Or are we good on on everyone's end?
Yeah, very good.
Yeah, no questions here. Thanks, Paul.
No problem. Sorry, my voice is a little raspy. It's just been talking a lot this week, unfortunately. So my voice is worn out.
You were out celebrating Diwali yesterday, weren't you?
That's exactly it. Okay. Well, in that case, I will give you 10 minutes of your time back. But in the meantime, if you have any questions, feel free to email me, and then I'll be waiting for the the recording to come over, and then I'll send it to you all.
Okay. So what's the plan now? Do you want Mithali to work on this and do a presentation back to you?
Yep. I think same way we've been doing in the past.
Okay.
And then
but the scope of that could be anything which is coming to financials, or keep it exactly same what you did, or?
My demo script is pretty much exactly what I did. If Mithali wants to deviate and create something herself, I'm certainly open to it. I just know that for the first go around, it's always easier to go off a script and kind of follow something.
Okay.
Okay, and then we can reach out early next week to see, if she needs additional time before she presents back to you.
Absolutely, and then I'll just let you define when she's ready to present, and then when that happens, just send over an invite.
Yeah, sounds good.
Okay.
Okay.
All right,
Thanks,
everyone.
Paul. Appreciate it.
No problem. Have a great rest of your day.
All right, you too.
Bye.
Thanks, everybody.
All right, bye-bye.
Thank you.
Bye.